Good morning, Herb. I just want to make a couple comments about NVIDIA, and I think it was the biggest surprise that really shouldn't have been a surprise. We had Google, Meta, everyone telling us, telling us they were increasing their CapEx spend, and yet we saw it with the huge NVIDIA quarter. What I thought was interesting is the gross margin went up to 78 and a half, up 240 basis points year over year. The operating margin in the business is at 65% with 84% incremental revenue contribution dropping to operating margins. So if you look at, for every new dollar they gained year over year, 85% of that basically dropped to operating profits. So the profitability is extreme. And they're adding about $6 billion of cash per quarter. And so we're looking out to this company having $100 billion of cash and just trying to think about what are they going to do with the cash. The most insightful comment I thought was the Goldman analyst was asking about competition. And Jensen said that what their differentiating factor is, since they developed the whole system, the networking, the cooling, the chip all together, is they can move very, very fast. And we really haven't seen a whole technology cycle being driven by one company that's on a 1-year iteration cycle. And I think that's what is catching everyone kind of flat-footed, is how fast NVIDIA is moving. And so when you're doubling the computation speed and raising prices a little bit, you're massively driving incremental value. And I think the big idea here is that inference is bigger than training. And most the hyperscalers are still doing training right now. And there's this huge debate if inference will be open all these other companies. But NVIDIA is going to have the lowest cost inference. And so I feel like there's still a large tail to this story that people don't appreciate.